When it comes to the racial wealth gap, author Mehrsa Baradaran once said, "Lifting people out of poverty can have trickle-up economic effects and raise all boats." For the best personal finance content, subscribe to my channel and hit the bell icon to be notified when I post a video twice weekly. The Color of Money by Mehrsa Baradaran is a revolutionary book that gives insights into the reason for the deliberate racial wealth gap in America. Racism has always been a hot topic in America, but few considerable efforts have been done to end racial inequality in the country. The United States has a history that includes the racial wealth gap, racial segregation, and black capitalism. The book The Color of Money covers the history of black-owned and black customer-oriented banks. This includes how racism grew into segregation in banks and neighborhoods and how wealth was silently shifted from blacks to whites by deliberately creating a hard-to-detect economic trap for black communities and their banks. Mehrsa Baradaran is a professor of law at UC Irvine Law and celebrated banking authority. In addition to The Color of Money, Black Banks and the Racial Wealth Gap, she is an author of How the Other Half Banks. In her book, The Color of Money, Mehrsa introduces readers to an era of racism in American history that is often ignored or rarely mentioned. The author explained how African Americans continue to be systematically and deliberately locked out of American economic prosperity. As a quick reminder, I'd like to see you invest in the channel by clicking the like button and helping me reach my goal of 50 likes. Also, if you're enjoying my content, consider subscribing so I can help you with personal finance and economic concepts every week. Subscribing is free and you can always unsubscribe later. In this video, we will review The Color of Money, Black Banks and the Racial Wealth Gap. The Color of Money book review will provide the deep historical context of racism and its outgrowth as segregation in neighborhoods and banking systems. Black banking and the racial wealth gap. In The Color of Money, Mehrsa Baradaran chases the persistence of the racial wealth gap by focusing on the generators of wealth in black communities, black banks. When the Emancipation Proclamation was signed in 1863, black people owned less than 1% of the United States' total wealth. After 150 years, although the black population is smaller in number, blacks still only possess 1 to 2% of wealth despite all the economic progress in America. By studying the institutions generating wealth for black communities, Mehrsa Baradaran denied and challenged the myth that black communities can never accumulate wealth in a racially segregated economy. She mentioned that the tragic failure of Freedmen's Bank in 1874 robbed the savings of over 63,000 black depositors, which resulted in a loss of trust in the traditional banking system. The book persists that the foundation of early black-managed banks to serve communities cut off by Jim Crow laws from full participation in the United States economy. Baradaran explained that the forced ghettoization, urban neighborhoods in America perceived as being high in crime and poverty, during Jim Crow cut black people off from participating in economic activities. The black banks owned by whites give loans to black people on strict policies, i.e. higher interest rates than whites, higher deposits, and small loans with shorter terms. The black neighborhoods titled as being in decline were not given loans, access to high-paying jobs, and even primary job opportunities. The central point of the book is that black banks cannot thrive in the majority culture by collecting money deposited in black banks and funneling capital back into the white system. When the lower interest rate on deposits and higher rates on loans didn't work, white banks imposed charges of predatory practices on black banks. This act was an example of the disloyalty of the American power structure to the black community. The book also explains how specific policies and laws such as the Homestead Act, GI Bill, and the Federal Housing Administration, or FHA, have created the racial wealth gap in America and denied the opportunity for black community to advance and economically prosper. Black capitalism and the catch-22 of black banking. Mehrsa Baradaran stated in the book that black communities were not able to access and accumulate a large amount of capital, or if they managed to collect it, the cost is much higher than whites. The black community was restricted to receive credit or insurance from white banks, could not purchase a home from white homeowners, and had to find black customers to sell their products. All this while white businesses can sell their products to anyone, which resulted in a big competition for black customers. Black people have to compete with whites as well as the other black businesses in the market. The mortgage rate in white banks for black consumers was high when compared to mortgage loans in black banks. This placed white banks in an uncertain situation because when black people purchased property, the property's perceived value by white consumers decreased and thus compromised loan collateral. After the end of the civil rights movement, the black community enjoyed equality in the form of political and legal rights. Still, economic equality remained elusive. Baradaran stated that political and institutional aid is necessary to help the communities to come out of the poverty caused by segregation and discrimination of black communities. Blacks were the victims of poverty and poor because their property was perceived as less valuable, their deposits were more costly, and loans were unstable. Despite the support for black banking and capitalism, black capitalism was unable to resolve the trouble of asset acquisition because of risky loans, low profits, high costs, and low bankroll for investment. Baradaran further demonstrated that in a segregated economy, the low circulation of funds makes the accumulation of capital highly difficult. White banks were coercing black banks to export funds from the ghetto to finance the American dream. The author notes the use of financial mortgages in response to investment in government securities and the outflow of deposit funds into other people's mortgages in the secondary market escalated because of mortgage-backed security. This resulted in the outflow of funds from the urban community to the broader economy because white banks were now investing in mortgages that created an economic trap for black communities and their banks. This catch-22 of black banking also occurred in the Great Recession of 2008 when black banking suffered failures due to the subprime mortgage crisis. Self-help as an alternative to structural change. Lastly, Baradaran challenges the concept of self-help as an alternative to necessary structural change that is considered a solution to the racial wealth gap and leads toward building black wealth. She stated that these initiatives function as a political decoy to avoid racial restitution and more fundamental reforms in government policies. The book The Color of Money, Black Banks, and the Racial Wealth Gap also describes the role of property ownership in repeating inequalities and the political economy of financial institutions. Mehrsa Baradaran states, supporting black banking is not a solution to the racial wealth gap in America, and black banks can never accumulate wealth or capital in a segregated economy. Based on the outcomes of past policies, banking in segregated economy, and workfare policies, Baradaran proposes that a new black deal is required to help black communities. Moreover, she insisted that new laws and policies are inevitable to ensure an equal economic future. The Color of Money, Black Banks, and the Racial Wealth Gap provides deep insights into the history of racism in America, black banking, racial segregation, and building black wealth. The book's author, Mehrsa Baradaran, studies the crucial role of financial institutions and politics in deliberately creating racial inequality in the United States. It includes an ongoing history of racism without a happy ending. The Atlantic states that this book provides profound accounting of how America reached a point where white Americans have 13 times greater wealth than a median black family. Now that you know so much about America's financial history, you might be motivated to invest. Invest easily and effortlessly using Acorns. With Acorns, even your spare change can grow into a mighty oak. Explore the new Acorns Early feature and help your children save for their future while you shop. Use my link in the description and get your child started investing in under 3 minutes. If you're a YouTuber or are considering starting a YouTube channel and you like my editing style, click the link in the description to get a free trial of my software. Thanks again for all the support in the comment section. And a special thanks to Alexis, who was our new comment section champion for this week. Make sure you join in on the discussion for a chance to have your comment featured. I read and reply to all the comments I get. Check out the videos on your screen on how to improve your finances. If you like this video, hit the like button. It helps out a lot. Be sure to subscribe and share the video with your friends. Check the links in the description for offer information. Thanks for watching, and I'll see you in the next video.